and it is I am CA Pannaraj, Secretary of SIRC of ICAI, the Southern India Regional Council of the Institute of Chartered Accountants of India. It's very heartening to have another program on investors awareness. It is an initiative by the Ministry of Corporate Affairs of Union Government, based on which we have been trying by the at the Regional Council. At least once in a month, we have one program on this investors awareness program. And today's topic is real estate investment trusts and infrastructure investment trusts. And the resource person is Rupal Khandelwal ji. I am very happy to invite you, madam. A warm welcome to you for this webinar. Thank you for accepting to be a guest of honor today, guest speaker today. And
thank you, sir.
I also take this opportunity to invite you or welcome you all, the delegates. I think it will be very useful to you by seeing the profile of the speaker, madam. It is very heartening to have an official, that is AGM at BSc level, taking out time for us. And this is a program for creating awareness about these investments. So I'll take the opportunity now to introduce the speaker, madam. Mrs. Rupal Khandelwal is the Assistant General Manager in listing business at BSc. She started her career as a bachelor, as a merchant banker with UTI Securities Limited, and has an extensive experience of various domains in listing. She is spearheading listing business team in BSc since 6 years, covering IPOs, debt issuances, REITs, investment ITs, buyback delisting, scheme of arrangement and ESOP. With her experience, with her expertise in due diligence, she has engineered compliance and control standards in the listing department to balance and optimize business goals versus regulatory expectations. She has also represented BSc at different committees formed by SEBI on various discussion papers and has been instrumental in suggesting various reforms in the regulations ranging from equity to debt, REITs, and investment ITs, trusts. Rupal Khandelwal is an alumni of Pune University with Masters in Business Administration, specializing in finance. Presently, she is also pursuing law from SNDT University. With this introduction, I'll take the pride of once again welcoming the prolific speaker. Over to you, madam, and we have a great session ahead for us.
Thank you, sir, for the kind words of yours. And I hope I'll be able to deliver what is expected out of this session. So with my, whatever experience I have, I hope everybody is able to, gather some kind of a knowledge or insight and take this forward. So yeah, so I think just to begin with, I'll just share the PPT. Yeah. Is it visible to everybody?
Yes, ma'am. Yes, visible, ma'am. Please continue.
Visible, right?
Yeah.
So I think today's topic that we have is, I think, quite a good topic that the regulators and the ministry, they've thought about it to a great extent, and now they have brought this into picture, and there are various reforms around it that is being taken by the regulator. I think the wind started blowing for this Reits and InvITs as a product per se, apart from what equity or plain vanilla equity is concerned, or a plain vanilla debt, fundraising is concerned. I think this is something that has, changed the perspective to a larger extent, that, funds can be raised through only, issuance of equity or, issuance of debt instruments, or largely, either mutual funds have some kind of an exposure to that extent. I think with REITs, I would want to say particularly that, real estate is one big sector that supports not only, not only one sector, but there are various ancillary, industries that is being supported by REITs per se. There's steel, there's so many other industries that, are dependent or largely dependent, I would rather say, on, a real estate sector. Even InvITs to that extent also supports a large number of, industries or large number of industrial segments to that extent. So I think giving boom to, these kinds of sectors, real estate players, I think introduction of REITs and InvITs into the space of Indian domain is very, very important. Though REITs particularly has been a great, product overseas. However, in India, it is yet to see the kind of traction that it should have, largely considering because the real estate more so in our country plays in a different, way. Now, I think with the introduction in 2014 of these products, somewhere, government has also given them some kind of benefits and, the tax benefits that has been granted to them. I think now the perspective slowly is changing, and we are, welcoming these kinds of products in say, and, trying to raise funds through REITs to monetize, the value and, to unlock the value of this, and then the promoters or the, the real estate players can put in money into a different kind of a, real estate and, go forward and bring about a change. So I believe that, all of you must have read something or the other about REITs or InvITs in, newspapers or in articles, because this has been quite a say in, as far as newspaper articles or other things are concerned. Quite have been written about them, quite whatever advantages or they carry. Some of the other thing, I think you must have touched base somewhere. I don't know if in CA, as a part of your curriculum or as a part of your, how much you must have touched base on these products, or whether these products per se have been introduced on in your curriculum. But I think whatever limited experience that I have, particularly in REITs and InvITs, because in BSc, I manage listing of REITs and InvITs also. Also, as in BSc, I was given a chance, to represent when they were, changing the regulations from what it was there in 2014 to what, we have come, as a change in recent years. There have been many changes, but when this product started rolling, I think in 2018-19, when we had first InvITs, listed, that is IRB, there were a lot of discussions about, what, retail investors, will this be a retail investors product? Or we should only, put it through the institutional players only, or, how, the structuring should be done so that, it gives a maximum benefit to the investors. Plus, whether, if retail investor per se can understand a product of a REIT, because it's such a little complicated as far as the structuring is concerned for REITs. So, just let me take you forward that, to make you understand what typically, in a lucid words, what typically REIT or InvIT is. Suppose, say, for example, I want to invest in a, real estate property, but I don't have money. So what do I do? How do I get an exposure to that? The simple way this has been structured is, I can invest into a REIT. Okay. Now, how a REIT is formed is say, for example, if a company, say, I would say X, Y, and Z, it has got 10 properties. Okay. Out of 10, 8 are completed property, they are revenue generating property, they're all commercial properties. Okay. So they're all revenue generating property. Out of that, 20% are like, developing, or they're like near completion, or they're yet to, give some kind of a deliverables in a simple language. So what I do is I will go, park these assets into, I will make a trust. So I become the sponsorer. I make a trust. I park all these assets into the trust, and I monetize my value from this trust. And this trust becomes, since it has got 80% of the product as a revenue generating, this becomes a revenue generating product for the investors per se, who would buy the units of REIT, giving them a distribution value. So whatever it generates, 90% of it just passes on. So this is how the structure of a REIT or an InvIT would have. InvIT is an infrastructure based trust, which is largely owned in India, most of the infrastructure is all either owned by the state or by the center, depending upon how. Largely it is all dependent on that. But InvIT REITs has got all private players. Most of them are private players. So they are building upon and driving a value chain out of it. So say for example, even REITs or InvITs typically is not a simple structure. Per se, I would want to say why, because it's a kind of a hybrid module that you have it between a mutual fund, because you have an NAV which is deriving out of how you have it in a mutual fund, and as an equity, it pays out all the dividends and everything that is required to be paid out of. And largely world over, it is actually demonstrated as an equity instrument more so, because the way the STT and everything is levied on it, it is largely being focused or placed as a equity instrument. Even at BSE, any REIT that has been listed, okay, is based on the equity instrument. All the
Ma'am, the PPT is not moving. Have you started or else?
No, I will start it.
Oh, okay. Thank you.
I am just giving a little background so that before I started, I don't want to just rush up to PPT.
Understood. Thank you.
Yeah. So I'll move the PPT, don't worry. Yeah. Okay. So largely, this is what the brief gist about a REIT and an InvIT. So we'll now move forward to what a REIT or an InvIT is. So of course, the name as it stands for, everybody knows it's a real estate investment trust. Why a trust base is formed? So that it can operate a portfolio of income generating real estate assets. Various real estate assets that I just gave you an example of is parked into this kind of an asset, which is owned and operated. It is very important to understand this is owned and operated and managed now by a trust. Okay, so the sponsor will sell off it, REIT will purchase it, REIT will own it, REIT will have an income generation from it. So this is what the fundamental of a REIT is. Now, see, typically anybody would say that, why can't anybody else, there are so many real estate players who are there into the business, but why aren't they forming a REIT? So see, typically, as a real estate player, I will have to see what kind of properties I have. And not all kind of properties at every place that I have are that kind of an income generated, which can be passed on to, the players or to the investors at large, particularly, and what kind of focus that I have as far as, as far as building my real estate is concerned. So typically, as of now, we've seen only bigger, real estate players coming into the listed space per se. However, big players like Brookfield, Mindspace, all these people have come into picture. They are bigger players. I haven't seen, a smaller player as of now coming into this business. REIT, as in whenever they form, they have to get it listed. I think within a period of, if I'm not wrong, within a period of 3 years, whenever they are formed. So they have to get it listed, and you can buy a unit of a REIT. Similarly to that, you can buy as a share, in a equity listed company. So as far as dealings on the stock exchange is concerned, there is no difference. They are, they are regulated investment structures. Whenever a REIT is formed, okay, they have to go and get themselves registered with SEBI. They have to get the trust, whatever they are setting up, they have to get that mandatorily registered with SEBI. SEBI has got certain tick marks that is required to be done. Say for example, REIT is a very recent thing that has come into picture, and typically whenever a REIT is formed, okay, it is obvious that unlike an equity player who comes to the market to raise funds, has got typically a track record. REIT per se does not have any kind of a track record. Okay, that's the difference. But the SPVs that are coming into the REIT, or SPVs, I would say, rather than the SPVs, I would rather say the properties or the commercials that are coming into a REIT or an InvIT, okay, typically have a track record. Generally, I believe everybody knows that, real estate players, whenever they have a project, they move it or they float it through an SPV. Okay, so these SPVs typically have a track record. So, SEBI has understood that philosophy, and, they've asked them to submit as a part of the track record, they can submit the financial statements of their SPVs. So that has been a little tweak that, SEBI has given these people, considering the structure that is there in this. So as far as the REITs are concerned, I think because this is a new structure in itself, there are quite a bit of stringent corporate governance requirements. There are 6 monthly reporting. There is, I think, a valuation which is required for 6 monthly basis. There are, related party transactions that has to be taken care, and SEBI looks at it very carefully. Whatever you can leverage on, that is also capped, I think, by SEBI, but largely, I think they have been very kind enough towards these structures. They've understood their, teething problems. They've given some amount of leeways also, but at the same time, they've been very stringent about, making certain kinds of rules and regulations to govern these structures. There are professional teams that are required. What kind of an experience do you carry when you're floating a REIT? Everything has to be perfectly, all right. And SEBI looks at it very stringently. So I think that is one part. So this is typically the structure of a REIT. Okay, this is the flow chart of a REIT. This is how the distribution of cash flows and distribution of, how the properties or the assets typically is being parked into a REIT. There are various, say for example, in an equity, when there is an equity, there are various parties that are involved, as far as equity is concerned. There is a company which is a promoter company. Then they, to carry out the due diligence, you have merchant bankers, you have other parties, you have legal advisors, you have an auditor, everybody. But REIT as a structure is very different to what a plain vanilla company is concerned. Okay. The REIT has, or an InvIT, okay, both will have similar kinds of, entities which are involved in being, this being floated, is that, there'll be a sponsor. Sponsor is the person who has the ownership of the units, and he transfers those units into a REIT. Okay. Now a REIT can be floated as a form of, from an SPV to a holdco company. But as in, to manage a REIT, they have said that you need to have a manager. The manager, in order that the manager is not, they have always thought into a picture that, what if I appoint a manager in the sense, not an individual manager, this will be a company who will be managing this thing. Since there's a management that is required for these properties, they are, given, that company is given a manager fee. There is a fee that is allocated to them to manage these properties. There is a trustee who holds the REIT asset because it is formed as a part of trust. Necessarily, it will have a trustee in place, so which holds the assets of the REIT for the benefit of your unit holders. Also, there is a distribution of cash flows that happens through REIT, which is passed on. I told you in the beginning itself that what an investor would get is the distribution of the cash flow that is required, that is coming from the asset that is parked into that REIT. Okay, whatever income that is, or whatever rental incomes that is coming, from that REIT is passed on to the investor. So this is the benefit that the investor gets as a distribution. So yeah, so as a part of this, SEBI has also realized that this is something, it's a hybrid kind of a product. I told you that this is some kind of an instrument between mutual fund, because it's at an NAV, as a fixed income, because it has a regular or a yield that is coming into it. There's a regular amount of cash flow that keeps coming in, because if a property is given on a rental income or a rental per se, the income would start flowing in. So and they are all typically 90% of them are typically income generating products that is being parked into a REIT. So I think that per se, that I think they are quite a stable product, and I think with Mindspace and and Brookfield that have come into picture, I think there's a good amount of valuation that investors have made. So I think that makes it more safe for people to invest in these kinds of products. So this is just a small example of these two products. Now, when these products had come into picture, as a part of my introduction, I also said that SEBI had initially hiccups on whether this should be an institutional product or whether we can park it onto retail. So initially, there was a minimum investment of around 50,000 and also. But with the representation and with so many InvITs got listed, there was representation from investor community themselves that they needed to invest in these kinds of products, and these kinds of products are safer. However, having said that, I don't know how much a retail investor would understand a kind of a product that REIT or InvIT is. So we have had around 3 REITs listed with us. Typically, we can see the market capitalization that these have is roughly around 28,000 crores and 17,000 crores. So we can understand the kind of the capitalization that these people have done. So now SEBI has moved on to make it as an investor, retail investor product, wherein you can invest, how you invest in a share of one, or you can even go and buy a one share for an equity listed company. Same way you can go and buy one unit of a REIT or an InvIT. So I think that is a good step by SEBI, so that for a publicly listed, there is at least some amount of traction that happens, or there should be some amount of churning that happens in the units of these REITs and InvITs which are publicly listed, and not about the private placement. I'm just talking about the public issue of these REITs. And REITs can only be listed to public issue. There's no private placement that is allowed in REITs and InvITs. So as far as public issue is concerned, there has to be some amount of churning of those units. Only then, there'll be some amount of traction even on the stock exchange as far as the biddings are concerned, as well as the buying or selling is concerned. So there will have more, depth into the market only if, retail participates. So there are a large number of investors, so that, it creates some amount of depth in the stock exchange market. So this is typically the kind of, REIT that has come into picture. Of course, Blackstone is quite a big group, and even K. Raheja, we've seen, kind of properties they have done. Who can invest in a REIT? I told you that, any institutional investor or any, foreign investors, they can buy a unit of REIT. Here it is written, minimum lot size is 200 units, which now, typically, they've got a recent amendment, to which they have, said that even 1 unit of REIT you can buy and sell in the market. So how do you buy? It's simple. You have a Dmat account, go to the Dmat account and purchase the way you purchase an equity share. Go and buy a REIT. Investors can also buy REIT through a REIT IPO whenever it gets listed. As of now, there is no REIT. Typically, I know that is unlisted, and the SEBI regulations also do not allow any unlisted kind of a REIT to be there. So even if you're registered as a REIT, you have to typically get listed onto the stock exchange within a span of 3 years, or else your registration stands cancelled. So why should somebody go and buy a REIT or an InvIT? Why? One, because you have liquidity in place. I told you that large number of investors are now there at the stock exchange platform who can buy or sell the units, and there's a traction that happens in the units of InvIT. More so, because these structures are such complicated, SEBI has taken a step forward to have or establish a strong kind of a corporate governance, corporate governance framework and disclosure requirements from SEBI. So, you'll have to give me a little while. I just need to, put on mute for 2 minutes, if you all can excuse me. Is that okay, sir? Yeah, apologies for pausing. The kind of an asset quality that gets into a kind of a REIT are all A-grade kind of a commercial assets that are parked into a REIT or an InvIT. You have typically the stability of the cash flow that is there as a part of distribution activity. I told you initially also that 90% of your cash flows, okay, flows out to the public or to the investors at large. REIT, typically, when there is an income generating product, you always see the historical background. Of course, I told you initially also that, the performance of the SPVs from where these assets are brought into a REIT, okay, always would have a track record. So of course the performance that is there, or how much profit these have brought into pictures, and everything will be taken care of when the REIT is actually kind of a structured. So when SEBI also gives a registration, they all consider what kind of assets are being parked into a REIT, so that it becomes less difficult, or less what you say it is beneficial for the retail investor. And of course, REIT over a period of time, a particular entity, say for example, Brookfield, which got listed, okay, typically can have multiple REITs, okay, for multiple kind of businesses. So there's not necessary that Brookfield, which has made one REIT, will stick to that one REIT. They can make multiple REITs for different properties that are considered. So for one kind of a property, there is one REIT. The other kind of property, there can be another REIT. For third kind of a REIT, there can be another REIT. So, and these REIT can, say for example, they have parked 10 properties into it. Okay. So if those 10 properties are, their distributions and everything is done, they can always acquire another, they can be another a real estate property that can be brought into a REIT. So there is a kind of a performance, or in case if they feel that there is no performance that is, or there is no, nothing that they require to this thing, then they can of course dissolve that REIT also in time to come, as in, placed in the SEBI regulations. Now, of course, there's a kind of a diversified portfolio that is there, that is brought into a REIT. There can be different cities with multiple kinds of, say for example, there can be A grade cities, a set that is parked into a REIT combined with a B grade city, with the C grade city. So there is a different kind of portfolio that is built up in a REIT per se, so that they have a different, say for example, if a real estate is not performing in an A grade city, it would be performing in a B grade city. And we have seen an analysis, or we have seen that kind of a curve, over a period of time, that, B grade cities have done well over a period of time. There has been a boom in the A grade cities also, as far as real estate is concerned. So it's just a small comparison on what or how our traditional investments have been, and what is the change that REIT has brought into picture. The investment characteristics, or the quality, the profile that it carries, the governance standards are carried. They are, they are actually, quite a little bit different to what a typical unit is concerned. For a unit, you can even invest in a, say for example, if it is valued at 100 rupees, the unit, you can have 100 rupees and invest in a REIT. Whereas if you want to go and invest in a real estate, you need a big chunk of investment. Okay. So that is one thing, and it becomes a hassle for everybody. If I have to go and invest in different kinds of properties, I know that it is very difficult for a person to actually maintain those kinds of properties. There are a lot of hassles that happens. There's a lot of control that you have to exercise when you're managing so many real estate properties by yourself. And there is a lot of transaction cost that's involved. So in case if you don't want to do that, you can always invest in a REIT unit and enjoy the benefit of it without being hassled, or without being, troubled by whatever requirements are there as far as managing the properties are concerned. You have to pay tax, of course, on the properties that you own. You have to maintain those properties. So all those hassles are like, taken away when you invest in a in a structure like REIT. The minimum, see, the lot size here is written as 200 units, but please consider it as one unit. So in REIT also, you can invest in a minimum lot size of 1 unit, and even in real estate, as an equity shares of a real estate company, you can invest in 1 share. So there is no exit load. There is nothing that is involved in this. But typically, you can invest directly into this structures directly. There's a high quality of asset that is there, because there are prime location properties which are parked into a REIT. And of course, when you invest in a real estate directly, what you do is you just go and buy a property in XYZ building, and say for example, if that building is not even or is halfway struck, so your entire investment of that sort gets struck in the and you have nothing, you can't do anything in this. Here you can have a small investment into a diversified REIT, and you can have the investment managed. So that is also one way we can have the things in place. Can you just excuse me for a while, please? Just 2 minutes of. Yeah. So the returns that are given by a REIT or InvIT is typically, there's a regular income that is given, or regular distribution of income that happens through a REIT or InvIT. It's like, when you invest in a real estate, you have a profitable, kind of an exit if there is an appreciation in the property that you have, invested in. In case if there's no appreciation that is happening in that kind of a city or that kind of an area, then you're probably stuck with marginal, returns. As far as the equity shares are concerned, we all know whether if the company is profitable, only then you get the dividend incomes, and not necessary that there is a, the kind of, you will have a regular kind of an income that is there. The dividends, of course, there's another part of that is distribution. The governance standards, of course, it is very high as far as these people are concerned, these entities are concerned. So there's governance standards. SEBI has already taken due amount of, presumptions that, these people will keep on having, high governance standards, because these are all, a standalone kind of a REIT the structures are new in place, these trusts are new in place. So that is why SEBI has also taken into account the kind of governance standards that it should have. I think all other investments, of course, investment in equity shares is always, subjected to high risks. And of course, in real estate also, the risk is high. If you invest in an upcoming property or in property which is, just, developing, in case whether it's going to be developed or it's not going to be developed, there's another kind of a risk that we carry with an investment of, crores of rupees or lakh of rupees that you're investing into this. And depending on where you are investing that asset, that money into which sector. So what kind of an asset which a REIT can own is, I told you that, there can be real estate or a commercial sectors or a rental income generating, whichever assets are there. Commercial sector, you can have offices, hotels, healthcare sectors. Of course, for every kind of a sector, you can have a different kind of a REIT. For example, there can be one REIT which is catering only to offices. Okay, one REIT which is typically, catering to hotels, or you can have a combination thereof. Anything is permissible as long as it meets the 80-20 ratio. So the important thing is that, residential properties are not allowed to be listed or as a part of a REIT. Okay, only commercial or rental income generating are allowed to be a part of REIT as of now. Okay. See, in red, why is it written? Because they have a speculative land bank, and land bank is something that we've all, we've all seen the story surrounding it. So how do these people, generate the income or distribute the income is one important aspect of what a REIT typically, or what a cash flow from a REIT is there. So the rental income is generated from the underlying real estate asset, which is held as a bunch of portfolio. The portfolio will consist of different kinds of products, and thereby you will have a big portfolio that is being governed into, and that kind of asset quality that is there. Now, the asset quality is a high quality institutional grade commercial properties, like, there are properties which are there in metro cities. We've seen so many malls which are there as a premium, upcoming malls which have good amount of rental income that is being generated to them. So, in Bombay per se, there's premium properties which are there as, properties in BKC, properties. We've seen these kinds of REITs which are being floated into the market have got typically high end, commercial properties, basically in metros. The rental income that they derive from these properties which are parked in the REIT, they're high quality, the tenants that are there typically, in a commercial properties, they are like, basically bigger brands or bigger tenants which can pay your rental income, or which have deep pockets to at least keep paying the rental incomes on time. There's no default that happens on the rental income. So, since you're paying, or since those people are paying those rentals on time, you will have a stabilized cash flow to cater or to distribute the income of that sort. So that is how, or that is kind of the properties that is parked into, so that, there is a graded or kind of a cash or stable cash flow that is, passed on to these, to the investors. Now, there are various kinds of reports or the governing standards that I already, talked about, is disclosures, or whatever disclosures are required to be sent by a REIT or an InvIT about, so that, investors are aware about what kind of investments these people keep doing. Now, SEBI has already mandated, even in equity, that, whatever an update is, okay, you will have to first disclose it on the stock exchanges. And these REIT, particularly, since they are unlisted instruments, it any which ways calls them to, say that, whatever or whatever property, in case if they are buying it, or in case there is, what is the earnings that they have materialized over a period, they should publish the quarterly, results, and tell the investor community that this is what their earnings are. The management should submit a half-yearly reports, and they should publish everything. The valuation that these properties have, what is the valuation that is there, half-yearly per se, they will have to, submit that kind of a valuation, whether there's an appreciation or a depreciation in the property that they own. Okay, will then be, should be known to the investor communities. As an equity, when you have meetings with your investors, you are required to publish, or, whatever webinars or whatever meetings that you have, you need to, publish those PPTs that you're sharing with your investors. Even the webinars now you're doing, that you have to do it, or you have to publish it on the website. So all these things that you're doing has to be made publicly available for all kinds of investors, so that everybody, even a retail, smallest of the retail investor or the largest of the institutional investor, is at par with the information that is shared. Of course, the institutional investors are far more have far more in-depth study about these kinds of products, and they cannot be akin to a retail investor who has some, a very little kind of an exposure to these kinds of products as far as their knowledge base or their expertise is concerned. I would not say knowledge, but an expertise over these is concerned. Of course, institutional investors are far more, they have they exercise in, expertise over these instruments. So of course, that is something, but all the information that is there as a part of REIT is there in the public domain, and anyone who wants to take out of that information, like, what is happening in REIT and how is it performing, it is up to that investor who can take out this. So there's an annual meeting that happens over a period of 1 year. So this is something I have told you about a REIT, per se. Because REIT and InvIT are kind of an akin structure as this structuring is concerned. So since I've already explained the way these REITs are formed, similarly are the InvITs that are formed out of this. So InvITs largely cater to the infrastructure sector. One caters to the real estate sector, one caters to the infrastructure sector. Now, somewhere I feel that, everybody feels, in fact, that, both are actually linked to each other, because you have to have necessary infrastructure in place if you want to have other kinds of industries or, manufacturing sectors or anything that needs to be set up. So you need to have an infrastructure in place, and in case to have an infrastructure, kind of expanding into the country like India, I think you need to have a monetization benefit given to them, and that is why I think infrastructure is one unique structure that is there in India. World over, you will not find much of InvITs progressing, but or much kind of an InvIT product that is there. So which real estate REITs is something which is there as far as globally it is concerned, but infrastructure InvITs you won't find much. So the purpose of it is to encourage and provide additional financing for investments in the infrastructure sector, which India, I feel, needs, a lot of investment in infrastructure sector. It supports diversification of ownership of infrastructure projects such as power transmission, roads, ports, renewable projects. I think government is right now, even in Bombay that we see, large kind of infrastructure projects have been taken up. There is a coastal road that is being built up. There is a metro that is being built up. There is a, I think there's another project that is coming in. Now there's so much of boom to, even renewable projects that government is thinking about it. I think if we need this kind of a diversification, okay, we need to have these kinds of structures also in place. So again, as far as InvIT is concerned, okay, they are also typically, formed by a sponsor, wherein the ownership of the property vests with the trustee, and the beneficiaries of the trust are the unit holders. So the structure is same as far as the REIT and InvITs are concerned. Only thing is the underlying assets which are different in each other. But I'll still take you through the presentation so that there are some minute amount of differences that, as far as SEBI regulations are concerned, I'll just highlight those. So InvITs' main aim is to provide the long-term cash flows and, to the, of course, the companies that invest into it. So benefit of listing of, investing in an InvIT is that you can't go and invest in a infrastructure space. Person like you and me cannot go. So government has given us an option, or SEBI has given us an option. Please invest in InvIT and support the infrastructure development. So this is a financing option for infrastructure projects. Free up developers' capital. Whoever is developing this kind of an infrastructure project, you free that capital, let it be there in InvIT. Now, whatever income is coming out of that InvIT is given to all of us, okay, whoever invests in it. So that kind of a benefit we derive, okay, by just investing a small amount of money into this kind of an InvIT. So, and this capital, which is free, okay, for the developer, he can go and invest into another kind of a infrastructure project, which is again going to, help us, of course, in a developing economy like us, but also, will contribute to the growth of the whole, the company that is there. So it's kind of a long-term investment. You can have a 10-year kind of an investment route, and you can have a distributable income that is coming to you. So it also gives you a stabilized kind of a returns. It gives high, of course, governance standards, and there's a potential growth. If there is another infrastructure asset that comes into an InvIT, it gives a long-term, benefit or healthy returns to the investors. So this is the kind of structure that you have. A little bit different too, because you have a project manager also here, because typically infrastructure has a project manager. So the only thing is that he just has to operate and manage the InvITs risk, and he manages an investment manager is one person who just takes the investment management. So this is one differentiation as far as a REIT and InvIT is concerned. Otherwise, other than that, largely the structuring almost remains the same. So there are key parties that are involved in a REIT in an InvIT. There's a sponsor who is the author of the trust. He is required to hold at least 50% of the total units for a period of 3 years from the date of listing. Now, just to enhance or just to put through that, as far as InvITs are concerned, SEBI has allowed private placement of InvITs, and there is a public issue of InvIT. And there's a third kind, which is the pure private placement, but which is an unlisted InvIT. So there is an unlisted InvIT also, in which the institutional investors can put in money, or whosoever can put in money, and they can come over a period of time and get themselves listed. So that is one. That is a differentiation between REIT and InvIT. As far as the SEBI regulations are concerned, real estate or REIT can only be through public issue. There's no private placement that is allowed. There's no unlisted REIT that is allowed. Only listed REIT is allowed. As far as InvIT is concerned, you can have a private placement, you can have a public issue, and you can have a unlisted REIT. We have seen a good amount of traction in both kinds of InvITs. We have public issues also of InvIT, of IRB. I think IndiGrid also was a public issue. Now we have private placement of tower infrastructure that had come. There is Orient InvIT. All those have come into private, the public or a private placement. So I think we have good amount of InvITs also listed as of now, just to see or increase that. But we have also some InvITs that are registered as unlisted InvITs. So there also we are seeing that people are making InvITs as a product, and still they are choosing to keep it as unlisted because of various reasons, or they don't want to enter into the domain of compliance, but they have a limited investor base. That is what the whole problem is. So they have a trustee. Of course, when you set up a trust, you again have to have a trustee who will oversee the responsibility of managing and activities of the project manager. Also, he oversees everything that he is responsible as a owner of the InvITs assets. So another thing that is there as an investment manager, that he makes investment decisions and manages it. Project manager, he's the manager of the project and oversees the operations, management, and construction. Now, the types of InvITs, again, I just told you that there are 3 types of InvITs that can be floated into the market. Is publicly unit offered. Okay, the units have to be offered into a public. Investment is, it was 1 lakh, which has now been reduced to 1. Private placement of listed units, this remains the same. If you have to have a private placement, you need to have institutional investors. That is what SEBI has been very clear about it, that only learned players are allowed to get into this, and with a minimum investment of 1 crore, and the trading lot also is in 1 crore. Privately placed, they can have institutional investors and minimum investment remains 1 crore. So that is what it is. So list of Indian InvITs which are there, I told you that we have IRB, IndiGrid, India Grid Trust as a public one. We had seen quite a few as private placements, which is IndiGrid, which is a highways project. The kind of assets that were parked into this were highways, tower infrastructure, which was again telecom as a asset. We had India Infrastructure Trust, which was gas transmission. I think IRB came out with another trust, which was privately unlisted one, which was based on the highway. Then again, there was Digital Fiber Investment Trust. There are other trusts also coming in as far as the private unlisted space is concerned. And I think they will be scheduled to list in due course of time. So, or when they reach a particular threshold, I think they will get listed themselves on the stock exchange platform. So this is what a benefit of investing in a InvIT, what kind of cash flows are derived in as far as a unit holder is concerned. So a unit holder makes an investment into a trust by subscribing to its unit, and what InvIT gives them in return is the distribution. That is a dividend, interest, and return of capital. So of course, you will always have a principal payment that would be done. You will have a dividend or a distribution that is given to you, and and how does an InvIT get these two? This is how you manage the or whatever the assets that are parked into an InvIT, you get an income derived from them. So what is the value I told you that there is a concept of 80-20. That means 80 is in the completed and revenue generating infrastructure projects, and 20 is the developing or an under construction kind of an infrastructure projects. These are the kinds of investments that are allowed to be parked in InvITs, which is an under construction infrastructure projects. You can have a listed or an unlisted debt of the companies in the infrastructure sector, other than the debt of your holdco or an SPV. Equity of a listed company is generating, government, all these things, but this is merely 20% of your thing. And privately placed InvIT can have any mix of under construction or completed infrastructure projects. So you can have, what are the rights that an investor has as far as Reits is concerned. As far as an equity instrument is concerned, you are always, you have a right to dividend, you have to right profit sharing. That is how you share the profits of the company. So the same way you have some kind of, for me, the rights that a unit holder of an InvIT would exercise. Right to receive returns through cash distribution, which is made by a trust which holds the REIT or InvIT. Right to vote on the related party, which is an important factor. One important thing is that, over a period of time, if you feel that the sponsorer is, there is a sponsor change, a change in the sponsor is also possible, provided, they get into the framework of what SEBI has prescribed of an induction or an exit of a sponsor. I think in one of the InvIT that was listed, I think there is one change in the sponsor also. So right to receive periodic disclosures, which is your annual report, the valuation that is exercised by 6 monthly. There are financials, 6 monthly publications. All these is a part that investors have a right on. So this is basically an insight on what a typically REIT or InvIT is. So I would open the floor for questions that anybody would have on the subject that I just touched base on. Though I haven't tried to cover it in as much detail, because then it becomes very confusing for people. Because I think as far as we are concerned, we need the typical knowledge on what exactly is. So yeah, so anybody would want to raise a question on this?
Questions will be in chat box. You can see the same.
Pardon me, I can't hear you properly, please.
Sorry, 1 minute.
Okay. So I think there are a lot of questions that have come in. I haven't seen them. Okay.
It's in chat box. You can see the relevant questions.
Yeah. I'm just scrolling them down. So let me see how many questions I have and how many of them I can answer. Okay, how to buy REIT in a Dmat account? I mean, see, it's a very simple question. Is like, these kinds of REITs which are available in the public domain. you can have a list of REIT also which is listed on a stock exchange. So you can go and buy, as how you buy an equity share. Same way you put a bid for a REIT that is listed with the stock exchange and go and buy the units. It's very easy. Okay. Yes, are dividends from REIT exempted? Under which section I'll have to see. But yes, they are exempted. Okay, what is the typical rental yield on the investment property? See, it depends upon, area to area or city to city, what kind of yields typically are there. It will all be subject to a average kind of a yield that will be there as far as what projects or what assets are parked into that. Okay, and every sector will have a different kind of a rental income that is derived from it. Say, for example, a commercial property in a healthcare sector will have a different kind of a rental income that will be derived. Okay, as far as malls are concerned, there are different kinds of rental incomes that are there. So yeah, so that is the kind of different yield that a particular asset will generate.
If you stop the screen sharing part, then you might be able to see the entire screen.
Okay.
Is my screen visible? I'm compelled to take questions here. Ma'am? Sorry, I'm muted. You need to unmute yourself, I'm sorry.
Okay. So can you hear me now?
Yes, I can, ma'am. I have
Yeah.
compiled 2-3 questions, you can see this.
Oh, okay.
From the chat box only.
Can there be many sponsors? Yes. Are the management fees high? It depends upon the manager that you're appointing. So are there any cost or fees charged through REITs? No. But yes, as far as formation of REIT is concerned, yes, there's a cost that is there, set up cost, which is typically your registration cost, and you need to make a trust. So that is another cost. So yes, is it possible for these assets could be more than on one side of the balance sheet? If yes, are there concerns there? Yeah, that is always a concern, because no, typically no. I think answer would be no, because they are high yield any which ways generating products. So no. Would REIT have assets outside India? I think there is no restriction as far as the regulations are concerned, but I think I need to check on this, whether they can have an asset outside India. Yes, they are exempted out of tax. I think, what does 6-month valuation means? An external independent expert. Yeah, they've given a criteria as far as the regulations are concerned. They have precisely, if you read the regulation per se, they have described how your valuation has to be exercised. So you have to follow certain kinds of norms. Then only you can, you have to have the exact, 6-monthly valuation done for all kinds of properties that is being parked into a REIT or an InvIT. And they are very stringent about it. Can you typically, okay. What is prerequisite to start a REIT by a group of people? No, REIT cannot be started by a group of people. It is only by a group or by an entity. Before an IPO, do REIT and InvIT give projection on revenue? Yes. Yes, there is a projection of revenue that is given, and that is there as a part of their offer document. what does mark to market potential of rental income means? See, this is the same question that you're asking for an, even in as a, a mutual fund which is holding a different kinds of assets into place, the same question flows in. Okay, what investor related issue does a regulator see in these kinds of funds? I think the large issue that SEBI had seen, typically were uninformed investors, because the structure was new. When we had public issue of, IRB or other public issues, the typical problem that we envisaged or we saw is the uninformed investors, meaning that, since these products were new, everybody thought, or per se a retail investor thought that, it will give me a listing gain, which everybody looks at as an investor community is concerned, or an HNI community is concerned, that we look at investor gain. But this is not an instrument for investor, or for a listing gain. This is a kind of instrument which gives you a stabilized kind of a return over a period of time. So, so it is very different to, a normal, which is equity share is concerned. We had to actually, when these InvIT and when these REIT had come into picture, we had to, or the regulator also, told both the exchanges that you please, have an investor, education sessions run, or, typically it would be better that you inform the brokers also. Okay, we had a session for brokers also to educate them, so that, other people are educated, or the retail investors is educated on what kind of product that it had. So these are not typically listing gain benefit kind of a product. So if somebody wants to have a stabilized return, should invest in these kinds of products. How investor capital appreciation, how investors are benefited by capital appreciation? Of course, you will have high rental incomes if there is a appreciation in the property is concerned. The rental incomes get higher, so you will have a higher distribution, because your 90% has to be a payout. My assumption is that if a developer gets into developed property into REIT at a higher valuation, he gets benefited in two ways. One, by the time he acquired the land, and during the development. This is the phase the price appreciation happens. So completely developed property, if bought, will already factor in all capital appreciation. Further appreciation may be limited to 3 or 4% annually, and yield may be 1 or 2%. So the returns are less by 6%. Okay. See, typically what you said makes sense, but not completely. Point number one, yes, there is a capital appreciation that, of course, when he acquires the land and when he develops that land, okay, there is a development, or there is an appreciation. Now, it will depend upon a property, where that property is located. Okay, that will also depend upon. Now, say for example, if there is a place where, or a B grade city, or he has a combination thereof. Okay. Where he, merges, a A grade property with a B grade property. So you will have typically a return per se of not more than 6 or 7%. Okay. So, yes, the limits, the appreciation that you see, a phenomenal, appreciation that you see between the land acquisition and the development, that is there, that I will not deny. But yes, there is a stabilized kind of a return over a period. Okay, so that is why this has come into picture, and that is why I've been saying it again and again, that we cannot expect a boom. Okay, and that comes into a real estate or a REIT, or that is why they are not like a listing gain or a typically boom kind of a thing. So I think this is something that everybody should understand, that yes, the appreciation that will happen will typically be lesser than what it is, but they are stabilized products. So yeah, I think these questions, there are more questions now.
No, ma'am. These are the questions that is compiled as of now.
Okay, so there are no more
Some-
questions in the
You
chat
just
box,
see chat box is the, that is these questions are compiled from the chat box only, ma'am. That is
okay.
that came up after the session completion. Actually, I don't know. Is there any question that has came up at the start of the session? Can you
No,
scroll
I
up and
don't
see?
see. I mean, from 5 o'clock, I can't see any.
Okay, maybe there might not be any question. Maybe we'll
Yeah.
hope all the questions are answered. So we'll just wait for one moment. Let's see any question pops up, or else we can wind up the session. 1 minute.
What is the typical percentage of capital that is traded on the stock market? See, this capital percentage is not something that, is something that, is traded on the stock market. But yes, typically you don't see that kind of, leverage or that kind of a depth in the market, because per se till now, till recently, the investment, okay, in these kinds of products was, restricted to holding a certain amount of units. So depth in any kind of market would come in only when there is a bunch of investors or a large pool of investors that is there. Okay, and as recent as 1 or 2 months down the line, SEBI has said that you can invest in a lot of one. So now is the time that we will see the traction that is happening, and right now there's very limited amount of investment or kind of changing hands, or I would say the float that is there in the market. Not much. If you see the historically also, I think REIT still had a better this thing than to InvITs. There's someone who is raising his hand. I think, have we answered his question?
Maybe I'll ask him to unmute.
Raja
Mr.
Kumar.
Rajkumar, you can unmute yourself. Sorry, can unmute.
Yeah, good evening, ma'am. Thanks for taking my question. So I have 3 questions. The first question is on the InvIT, you mentioned that the distribution of dividend is tax-free. But when they do the distribution, they also mention a certain portion of amount is towards capital and interest. So just want to know, how do we treat that?
I think that treatment is still, some say that this is a distribution of capital, and some say this is distribution of interest. Okay, so there are 2 mindsets that are actually floating into the market, to which we have already represented to SEBI that there has to be a consistent kind of a statement that should be written by these people, because they both attract different kinds of taxations, or so SEBI is actually looking at it, and I think because there are different kinds of representations which is given by the REIT and the InvIT industry on the tax implication. So right now, still under debate.
Okay, just 2 more questions. So the second one is on how do we value these REITs and the InvITs? Because for a share, there is a DCF method, or there are a lot of analyst reports available in terms of projection of the future cash flows. So for InvITs and REITs, is there any way as an investor, we could get the future projections?
So future, no. I think you should always read on what kind of value, what kind of properties are actually parked into a REIT. Okay, but as far as the valuation is concerned, I don't think so that you can actually value it appropriately.
No, because the question is, see, if you take like a power grid InvIT, it came at 100 rupees. Today it's going at 120. So how do we know it's 120 is a fair valuation? Because it is already appreciated by 20%, right? As a layman investor, unless I have a third party brokerage report, is kind of substanting that I will be kind of reluctant to look at these investment avenues, right? So, I am just asking if SEBI
I
could
see
do.
you have a valuation report that REIT or an InvIT publishes, okay, in the public domain also. So that is 6 monthly. And I think that valuation you can always rely upon, because that is being subject to different kinds of controls that SEBI has always defined. As far as what you said that coming at 100 and trading at 20, this is all between a market demand and supply. It has got actually if I would say that how much it has to do with the valuation is difficult. For an examples we have seen it in equity. Okay, so largely what is trading in as on stock exchange is largely because of the demand and supply. There's nothing, or there's hardly anything that I would say that or not hardly, but or some portion of it would be associated with valuation. We have all seen equity. How do you value an equity? And how much of the price that is quoted on the stock exchange is akin to that fair value?
Okay. And lastly, on the terminal value, in the case of an InvIT, I think it has a terminal value, right? Like if you take a power grid, I think initially they said there will be a terminal value which will kind of accrue the investors. But later on, I think government has come with clarification that subsequent InvITs will not have any terminal value because the asset will go back to the sponsor. So, if you have this kind of
It's a
situation,
buyback that will happen by the sponsor.
So in both the cases, the terminal value will go to the investor, or the terminal value will not accrue to the investor in the new InvITs that's going to come.
No, I think I will have to check on this subject. Okay, I'm not. I think I'm not the terminal value. I think I'll have to just get back to you on that topic.
Okay, sure. Okay, thank you.
Mr. Kirtikant, yes, please.
Yeah. Thank you, madam. Thank you for all the presentation. Yeah, I have few basic questions.
Yeah.
So one is that how much shareholding percentage should promoter hold, or it's like I'm just comparing this way. For example, a promoter company, Regulator, it's like some.
I can't hear you. Can you please post your question in the chat box? I think it becomes easier for me to. Okay, how much percentage shareholding is to be held by the promoter? As far as the promoter is concerned, the promoter is the sponsor. Okay, so what it says that what it says is, I think the SEBI regulation permits them to have a lock-in of whatever holding that they have in the InvIT for 20%. So that is the minimum amount of shareholding that a promoter per se. There's no promoter concept here. It's a sponsor concept here. So there's a 20% lock-in that is required. If I'm correct, I think you can just refer to regulations that are also very clear.
I hope all the questions are answered.
Okay. So,
Thank you. Yes, Mr.
So I think there was some amount of, guidance which was required as far as G6 are concerned. Is that so?
Sorry, no. Uh,
On the G6 also some amount of overview was required, or how is it? We can wrap up the session here.
No, ma'am. It's if at all if possible, you can have 5 or 10 minutes on that. Or else then we can wrap it up. It's up to you, ma'am. Yeah. We have planned it for 2 hours actually, but it's up to
Yeah. So I think, see, this was a read and InvIT is not a very safe. If I had to go into in depth, I think it would become a rather more, a very elaborative. Because, there are a lot of technicalities that are there. And I think only a REIT or InvIT expert, in the sense, who are actually making those properties in a REIT and InvIT, I think would get into the technical aspect. So of course, this is what to give you an overview upon, what REIT and InvIT, how a stock exchange or a regulator would address, this REIT and InvIT. So I had taken this session based on this. So I think I was, told to take some amount of, session, or, just touch base on what a, non-competitive bidding as far as G6 are concerned. If, I'll just touch base on that. So, the government had issued, you can borrow money into the market, and there are a lot of government securities which are there floated into the market. So, you can have an auction which is done in the government securities, and you can just participate, so that there is an in-depth, there is a depth again into the market, and all kind of retail investors can participate in a G-Sec. So the scheme has been, the non-competitive bidding facility has been, offered in government securities, and stock exchanges have been, required to offer the platform for this non-competitive bidding is concerned. This non-competitive bidding which is there is typically done through our IBBS platform, which is we called as a bidding platform, through which, even the bidding happens in the equity route or the debt route. The same platform, we offer it for the, for GSEC bidding. Now, largely when we say that what is a non-competitive bidding is, when the bidder is able to participate in the auction without quoting a yield or a price, typically in the form of, I think 100 is a lot which you can just participate. So this kind of a facility is available, typically, for the government security. In the government security, what I've typically seen is that they notify the, the rate of interest, and based on that rate of interest that you're going to derive, there is an auction that happens in the government security, which is captured by the stock exchange through an e-bidding mechanism. And that is how the structure or the government securities is passed on to the investors. Now, who can participate in the bidding is any individual, any HUF, firm, companies, corporate bodies, institutions, trusts, anybody who is prescribed by RBI who can buy these government securities and keep it with them. They are open to this. And as an exception, I think regional rural banks, urban cooperative banks also can, I think, apply in this. So this is one kind of a exception that RBI has given. And the minimum amount of bidding is 10,000 rupees, and in multiples of 10,000 that you can bid in is something that, has been prescribed. So, the settlement also happens, by way of, the stock exchange mechanism, or, how RBI has prescribed it to be. So the, weighted, so there is a typically, based on the coupon rate that has been prescribed by the government, the large amount of, bidding that happens on the GSEC, on the government security, and anybody who is desiring to buy it can buy it through the stock exchange platform. And I think there is a quite amount of material that is already available on the RBI side, detailing on how the structure of these GSEC instruments is concerned. These GSEC securities are like deemed listed on the stock exchange, and there is a public the stock exchange platform is available where you can just buy and sell these kinds of GSEC securities. These are deemed listed, so they are available to trade if somebody wants to. So that is a short this thing on the GSEC bidding platform of stock exchange, and both the stock exchanges have both NSE, BSE have this platform where you can just go and bid. So this is a small snapshot on the GSEC bidding. I think I was told to cover a little part of that. So this is how it is.
Thank you for an excellent session and a detailed presentation, and taking up all the questions which came up in the chat box as a part of our investor awareness program and rate and everything. Thank you. We place on record on behalf of our chairman and secretary in their absence. We thank you.
Thank you everyone for joining and listening to me patiently. I hope I was able to answer some of your queries. Thank you everyone.
Thank you so much.